Friends, you are not ready for this. Is it possible that the crypto bull market could end on this historic date, the one that has twice signaled the beginning of a bear run? While the crypto boomers are still arguing, Bitcoin is ready to break all-time highs and enter price discovery. Today we're breaking down the catalyst that could launch crypto into its final, most aggressive bull phase, the one we've all been waiting for. Get ready, subscribe, like, and let's dive into the future.
3, 2, 1, fire!
Before we break down the market and my top altcoin picks, quick reminder, this isn't financial advice. It's just my personal view on where the market stands right now. Always do your own research. Invest smart. Now let's talk real. The world, total chaos. Wars and tension in Israel, Iran, Ukraine, Russia, tariffs flying, economies wobbling, AI shaking everything, and crypto, it's deep in fear mode. The people who were hyped in January, gone, vanished. The ones who stuck around, exhausted, hopeless. I see it every day on Twitter. Bro, I'm done. I'm selling everything. And that, right there, is the setup. You survived 99% of the pain, and you're quitting at the final 1%? Of course it feels heavy, especially if you're new. But uncertainty is the fuel. That's how markets trap people. That's how big money gets made, by catching you on the wrong side. But we're flipping the script. Let's talk about what's next. First, Bitcoin is standing on the edge of price discovery. We called the bottom, and now it's pushing back hard. Just a week ago, BTC dipped to $98,000 during the World War III panic. Now, $107,400 and climbing. Not a surprise if you've been watching this channel. We follow M2 money supply. It dipped briefly, and then boom, right back to the upside. As long as M2 climbs, Bitcoin follows. Another green candle this week? Very likely. And this trend could keep going through September. Bitcoin's ready. Liquidity is here. Long-term holders are chilling. Exchange supply is at historic lows. The setup is perfect. The only thing we're waiting for? A catalyst. Market makers are lurking. They just need a story to justify the next rip. Remember Trump's win? That was a trigger. But behind the scenes, the whales were pulling strings. So what's the next trigger? Could be ETFs, could be inflows, could be a shift in market confidence as global chaos stabilizes. But there's one thing that's been on my radar for weeks, and it's huge. Before I break it down, quick plug, join my Telegram channel. That's where I drop exclusive, real-time stuff I can't share here. Now let's talk CoinGlass. This platform shows liquidation clusters, real-time data on where short and long positions sit across the market. And right now, Bitcoin's been trapped in the same range since December. Why? Because there's $27 billion in shorts stacked around $111,000. If BTC punches into that zone, boom, those shorts get liquidated. Sell orders turn to buys. It's like throwing gasoline on a fire. I'm not saying it happens tomorrow, but it's coming, and when it does, you'll want front row seats. Now let's pivot to the king of signals, Bitcoin dominance. Every BTC dip, altcoins bleed. But BTC dominance is at major resistance. The same ceiling it's been stuck under since 2017. If that breaks, and macro conditions flip to risk on, say hello to a full-blown alt season. Signs are already showing. Say, up 43% in a week, but we haven't seen multiple strong weeks in a row yet, which means the main move is still ahead. So let me leave you with this. We're entering the final stretch. Based on historical cycles like the 1,065-day peak in 2017, the top could hit October 20th, 2025. That gives us 4 months. And these final months? Historically, the wildest of the whole run. Think late 2017, it was absolute madness. Bitcoin to $150,000, $160,000, even $180,000, totally on the table. And altcoins? They'll go absolutely parabolic. Sure, the run could go longer if the Fed stays dovish, but no one knows the exact top, and that's what makes this phase so dangerous. Now, let's dive into the altcoin plays that matter most. Subscribe, smash that like. Let's keep it rolling. All right, let's not waste time. Let's jump straight into the first coin, Say Network. This is a Layer 1 blockchain built and optimized for high-speed digital asset trading, especially decentralized exchanges and high-frequency trading. It finalizes transactions in under a second, around 400 milliseconds. That's lightning fast, folks. But here's the real kicker. Say is making a bold move that could catapult it to the top. In May 2025, Say Labs proposed a radical shift, a complete transition away from Cosmos, going fully EVM-focused. Why? Because since August, over 80% of transactions on Say were already coming from EVM addresses. This decision simplifies the chain's architecture and positions Say to become the fastest EVM chain on the market, attracting the largest pool of devs and users in crypto. And that's not all. Say, for example, is showing incredible growth. Its TVL peaked at $612 million in April 2025. This is a direct indicator of the growing trust in the platform and its specialized capabilities. The SEI token jumped 6.6% in a single day, hitting 21 cents amid a spike in network activity. Oh, and let's not skip this. A major industry heavyweight just joined the team. Jamie Finn, co-founder of Securitize, came on board as a strategic advisor. Huge move for the project. Overall, Say gives me some serious early Sui vibes, back when Sui was just lifting off. So what do we have here? Fastest EVM chain, a unique edge that could attract billions in EVM liquidity and developers. HFT and DEX focus, Say is tailor-made for the future of decentralized trading. Ecosystem resilience. Despite challenges, the Say Foundation is pushing hard and staying focused on growth. Bottom line, Say isn't just another blockchain. It's a purpose-built, speed-optimized solution aiming to lead the EVM-compatible space. Now let's talk about our next rocket, Sui, a cutting-edge Layer 1 optimized for instant, ultra-cheap transactions. This platform is a beast built for high-performance dApps in DeFi, NFTs, and play-to-earn gaming. And here's why Sui is ready to explode. Not long ago, Sui's main DEX suffered a massive security breach, $223 million stolen. A brutal hit. But thanks to coordinated action from Cetus, the Sui Foundation, and 114 validators, around $162 million was successfully frozen. That shows the real strength of Sui's protection mechanisms and their ability to act fast under pressure. Also worth noting, there's been a cascade of new filings for spot Sui ETFs. Nasdaq submitted an application to the SEC for a Sui spot ETF, making Sui one of the first altcoins with a path toward regulated institutional exposure. That's a big signal of growing interest from heavy hitters and a doorway to massive liquidity inflows. And don't forget to check Sui's TVL. It's been on a steady uptrend for nearly a year. That's a clear sign of health and activity. Why Sui could lead the next bull run? Gaming and NFT specialization, built for massive-scale, high-speed Web3 applications. These are exactly the sectors that could drive the next wave of adoption. Institutional gateway, the ETF filing opens direct doors to big, regulated money. Resilience under pressure. The Cetus exploit proved Sui has a strong community and emergency response system. Sui isn't just a blockchain, it's infrastructure for the future of gaming and DeFi. And now let's dive into Ondo, the true bridge between TradFi and crypto. These guys don't just talk about tokenizing real-world assets, they're already doing it. And the latest news is pure fire. First off, let's talk strategic partnerships with TradFi titans. Ondo is now working with JP Morgan and Chainlink. Yes, seriously. In 2025, they hit a major milestone, collaborating with Connex's JP Morgan and Chainlink to settle tokenized treasuries across multiple blockchains. This was the first time JP Morgan used public blockchains for these transactions. This isn't just a partnership. This is confirmation that TradFi is integrating with blockchain, and Ondo is at the center of it. They're also working with BlackRock, BNY Mellon, Citi, and State Street. It's insane. Ondo isn't just building tokenized assets, they're creating a full-stack infrastructure. With BlackRock handling asset management and other institutions covering custody and operations, this is a clear signal. Billions in institutional capital are looking at RWAs, and Ondo is the key gateway. Second, massive growth. On April 19, 2025, Ondo launched their yield-bearing stablecoin USDY on Stellar, and on May 2nd, they bridged it to Solana via Layer 0. That's huge for accessibility and liquidity. In May 2025, Ondo hit $1 billion in AUM, and they're just getting started. To hedge against falling Fed rates, Ondo is now expanding into tokenized stocks. Yes, Amazon and Google-level equities. That's massive. They're not just an RWA protocol, they're building the TradFi on-chain megahub. Let's be real, Ondo is leading the charge into regulated tokenized finance. Now let's talk about Hyperliquid. This one's on a whole other level. We're not talking about a promising project here. We're talking about a DeFi giant that holds 70% of the entire decentralized perpetuals market. 1 out of every 2 perp trades happens on their platform. And the numbers speak louder than any hype. $10.1 billion in open interest, $5.6 million in daily fees, and $3.5 billion in USDC TVL. Hyperliquid is breaking all-time highs, and this is just the warm-up. It's a Layer 1 blockchain built specifically for perpetuals. At the end of 2024, they dropped the largest airdrop in history, 310 million Hyperliquid tokens to active traders. With a market cap of $1.2 billion at launch, they've now exploded to $13 billion, leapfrogging Aave, Pepe, and a bunch of OGs. Since I first mentioned it, Hyperliquid's price jumped over 65%, from $25 to $41, and it's just getting started. After TGE, it shot from 2.5 to 35 in a matter of days, delivering plus 920% gains, and it's now stabilizing around 40. That's not hype. That's fundamental growth, backed by a real ecosystem. Hyperliquid DEX is already in the top 10 DeFi platforms by volume, with $1.8 billion in TVL, excluding stables, and $3.5 billion with USDC included. This thing's a rocket still fueling up. Now the key part, the Hyperliquid ecosystem. HyperEVM lets you launch your own custom derivative markets, and creators get 50% of the fees. Want your own market? Just stake 1 million HYPE, about $38 million. Launch it and start earning. This isn't just a platform, it's a full-on DeFi business builder. In May 2025, the team launched its validator program. Anyone can now process blocks by staking HYPE. That adds transparency, decentralization, and brings the community closer to the protocol's core. It's how Hyperliquid cements itself as the real deal. And get this, remember, I said they were making $6 million a day in trading fees? In just the last 7 months, they've bought back $858 million worth of hype. That's not just activity, that's a power move. But let's keep it real. There are risks. Recently, Hyperliquid delisted Jelly after a $12 million dump caused by manipulation. It's a reminder that even top DeFi platforms can't escape bad actors. It's not a minus for Hyperliquid. It's just part of being decentralized. That's why community oversight matters. So don't FOMO. Yes, Hyperliquid already blasted off, but chasing green candles is how you get burned. My move? Track new launches on HyperEVM, wait for corrections, and DCA in small chunks, like 20 to 30% of your allocation if we dip to $30 to $32. Hyperliquid isn't just a token, it's a platform rewriting the rules of derivatives. The winners here are the ones who can read metrics, track charts, and not get lost in the noise. As you've probably figured out by now, I only talk about assets that actually deliver. I don't chase hype. I follow builders who show results. So let's talk Jupiter, not just a DEX, but the beating heart of DeFi on Solana. It powers liquidity like a machine. offering traders the best prices, minimal slippage, and dirt-cheap fees. Launched in 2021, Jupiter became Solana's #1 liquidity aggregator, pulling from dozens of sources for optimal swaps. But it's not just swaps anymore. We've got limit orders, DCA, TWAP, a cross-chain bridge, and even perps. And with the JUP token, the community calls the shots through the Jupiter DAO. Where to direct liquidity, which products to launch, which tokens to list, it's all in the holder's hands. Today, Jupiter sits on the DeFi throne in Solana, with a TVL of $2.61 billion, far ahead of Radium and Camino. And its 2025 spot trading volume? Insane. It's now rubbing shoulders with the big dogs like Uniswap. The fundamentals? Rock solid. In 2024 alone, Jupiter raked in $280 million in annual revenue, 40% of which came from memecoin trading. And in 2025, it's setting new records, all fueled by Solana's bull run. Jupiter isn't just surviving, it's expanding fast. In May 2025, during Solana Accelerate, they announced Jupiter Lending, a protocol built with Fluid, directly challenging Camino Finance. With a custom liquidation engine and risk isolation, it's launching in July 2025 and could change the game. And it's not just DeFi. In April 2024, Jupiter acquired NFT platform Drip House, which accounts for 80% of Solana NFT traffic, for approximately $23 million. That's a move toward a true Solana super app, merging DeFi and digital culture. In May, Chainlink data streams were plugged into Jupiter Perps, bringing real-time data to their Perpetuals platform, which already commands 70% of the Solana Perps market. More reliability, more traders. They're also innovating. In May 2024, they dropped a portfolio tracker that unifies tokens, pools, and staking into one clean interface, answering a real need for the 85% of Solana users who engage with multiple protocols. Bottom line, Jupiter's aiming to become an entire DeFi ecosystem, not just a swap platform. Unique touch? You can send crypto without even needing a wallet. That drops the barrier for new users and makes Jupiter more accessible than Radium or Orca. Let's talk tokenomics. In February 2024, Jupiter launched a buyback program, spending $3.33 million to repurchase 4.88 million JUP, and they plan to allocate 50% of protocol revenue to ongoing buybacks, very similar to what Hyperliquid is doing. That shrinks supply and could seriously push the price. Oh, and don't forget, a Solana ETF is coming. If it gets approved, that could light a fire under the whole ecosystem. And Jupiter will be right at the center. So yeah, I only cover projects that are already crushing it, and Jupiter is doing just that. It's not just a DEX, it's the core engine of DeFi on Solana, delivering massive liquidity and next-level efficiency. Let me remind you, nothing here is financial advice. Always do your own research before investing. Thanks for watching. Hit subscribe, drop a like, and I'll see you in the next deep dive.